underutilized parts of trading is properly understanding and interpreting volume. Price and volume are all that matter in the stock market. I'll say that one more time in a different way. Volume and price action are the only important indicators in all of trading. Not only the stock market, Forex, indices, dollar cost averaging, anything. And what I would love to do in this video is walk you through how you can use the information presented in the entire video to revolutionize your trading. Let's get into it. Here, we're going to look at Chewy. Now, I'm going to give you another example on not only Chewy, but a few other stocks in this entire video as I go back and forth. What I want you to do is take note of not only the charts and videos, but also if you're watching this in the future, which you likely are from recording, look at the charts, look at the price action, see if I was right. Judge me based on not only my analysis, but my sentiment reading of the charts so that I can help you make more money, impact more people, and give more to your community. Here on Chewy, just a few weeks ago, we had huge amounts of bullish volume come in. Now, bullish volume is oftentimes indicated by large green bars under your TradingView settings. Volume is a pretty standard part of most charts. If you don't have it on your charts, you are doing something crazy wrong. So to make sure it's there, click on indicators and type in volume right there. What I will be going through in the next 30 minutes is a pretty drilled down basic explanation, but if it works for me, it'll work for you. And by work, I mean help you make a lot of income for you and your family through trading the stock market. Volume is easy. Volume is simple. The mechanics and the price action of the markets are very, very easily understood. If a bunch of people are buying something, the price is likely going to go higher. If a lot of people are selling that thing, the price will likely go lower. And if either one of those prices gets taken out by price action, if the volume, selling volume or buying volume, get taken out by price action, then you definitely know that there's going to be some people who are hurt. And you can use that for the betterment of your entries, your exits, and your profits. Chewy had huge bullish volume coming in on earnings. What you could have done at that exact moment, if we go back in time, is say very easily, all right, Chewy, if you take out this buying volume, this would be a very, very strong indication that we're going to go lower. If the price, if the sellers, if the stock, if we take out this buying volume from this particular candle, we are going to go lower. However, huge volume like this, especially at a support, especially when the stock is nice and low, is a huge, huge realization that the likelihood of this company going up is pretty dramatic. Because when you have a bunch of buying, prices generally go up. The next candle that came in was actually a hammer candle. This is one of my favorite hammer candles because it has a very tiny upper shadow, but also has a bare body. That bare body is comprised of short sellers, and when the stock goes up, those short sellers are going to be forced to buy to cover. And if they have to buy to cover, well, price goes higher. It's also a 10 EMA strategy, which is my first bear candle that closes above the 10 EMA strategy, which you're all probably very familiar with. If it goes above that particular candle, you would have the capability of staying long on this trade and being in bullish, especially based on the prior buying volume. We get triggered in the next day. We are retesting the next day, which is essentially the retest of this internal double bottom neckline. There's the retest. This is also another bear candle closing above the 10 EMA. So I know if price action goes above that bear candle, more short sellers are trapped, and thusly the stock will continue to go higher. And based on all the previous buying, there's a lot of institutions, there's a lot of excitement building at this level. Perfect hammer, another one. Gap up, inside candle, high wave indecision, and then a gap above all of that pricing. Okay, what's Chewy going to do based on this volume now? Well, I'll tell you. But before I tell you, I'm going to show you another volume candle. This volume candle right here is going to be very, very important on Chewy's price action. And that's because it too has a very, very large bearish volume spike. If and when Chewy closes above that particular price, it is my opinion that it will go higher. And not only will it go higher if it closes above that price, it should hit 30 within a few weeks of closing above that particular candle. Now, more importantly than that, I am extremely confident, as in I have shares of Chewy right now, that we're going to go back up to that particular price based on, ready for this? Volume. Not volume profile, nothing complex, but basic volume. People have sold there before and made money. And people have bought down here. So if people have sold at a previous price and made money, what are they waiting to do again? They're waiting to sell there again. And we already have the buyers who are going to sell there. So we have the buyers, and I believe the stock is going to trade back up to $25, giving people who sold there the opportunity to sell there again and make money. But before we do that, it's very likely, in my opinion, that Chewy is going to do one of two things. Consolidate for 3 or 4 days and then trade up to 25. That's scenario number one. Scenario number two, have a little bit of a bigger pullback, maybe down into $20, $21, and then trade up into 25. But those are the two outcomes that Chewy's going to do. And it might take a little bit longer than a couple of weeks, but go back and check the charts on Chewy and you'll be like, wow, this dude is a legend. Now, the other reason that I really truly believe that Chewy is going to do that price action is not because I'm a wizard. It's because I study charts a lot and look at volume. Let's go back in time on a previous transaction that I did take on Chewy, and I'm going to do the exact same volume analysis that I'm doing right now that I did back in May of 2022. This is going to blow your mind. Here's the daily chart, and here we go. Huge, huge bullish volume on June 2nd. As I zoom into this volume, what I will be able to notice is not only was it huge buying volume, but it was a bullish gap and go. We were opening and we took out a bunch of bear candles closing above the high of those particular bear candles. Going back in time just to analyze what the actual chart looked like is you had huge bullish volume, a really great gap, and a super, super strong close. And if I zoom out a little bit more, what we'll notice, it was occurring at a previous support level. This is a price that Chewy has bounced off of before. So what I'm doing is I'm taking not only the volume, but the location, and I'm kind of blending it with candles, with gaps, and looking at this information. The cool takeaway for you watching this video, and by the way, if you're still watching this video 7 minutes into it, go ahead and click that subscribe button. I'm going to be here forever, instructing individuals all across the world about money, finance, stocks, growth, capital, all the cool things. On Chewy, looking at this volume, this says to me, this is a screaming buy because everyone's doing it at a nice and low price. And one last thing, if I zoom out for the history of Chewy, you're going to be able to see that this is the largest buying block of volume in the history of Chewy. Now, yes, this was a year and a half ago. And yes, I did take this particular trade. And yes, I made a little bit of money on this particular trade. And yes, I'm going back in time to create future price action predictions. But all of that boils down to when you start studying charts and you come up with predictive reasonings based on evidence about what something might do, you'll be able to make more informed decisions in real time. And all I'm doing is just analyzing volume and talking about the buying and selling of a security. That's it. And as we blend this information together and we start making it more concrete, it's going to be extremely helpful. So check it out. Chewy, big volume on earnings, nice candle. The previous earnings was also a bear volume bar. This is so cool. Oh man. Previous bear volume, which was right here, about $43.96. That volume was occurring on, again, the previous earnings, just a quarter previous. So now you're going to get to see the previous sellers who were profitable based on all of that volume, who made money selling. You're going to see this stock give an opportunity to sell there again based on the buying volume. You ready? Check it out. And it happened pretty quickly. So my interpretation of all this price action is where we are present day on Chewy is probably right here, June 21st, maybe June 22nd, or maybe somewhere in here. But my thoughts is we're in the June 21st. And what did we do? Well, not only did we give really good buying opportunities based on the volume, based on the candles and all that stuff, but we traded back up to that previous resistance. And that resistance was marked and earmarked by volume. And look what we did. We traded into, let's call it 44 for easy numbers, and then we sold off. Now, I'm not saying that you had to short sell there, but what I am saying is if you bought the stock of Chewy down at a little bit of a lower price based on volume, you could have had a really good idea, process, or plan on what it might have done in the future. And if you did sell it to capture a profit at 44, or you sold it for a gain and went bearish at 44, and then the stock dropped $5 a share on a $44 stock, and you do that with 1,000 shares, you just made $5,000 in the course of 4 days using volume for your analysis. What? The best part is this volume analysis works on any time frame. What I would love to do is go into a random 3-minute chart and walk us through it. So let's go do that right now. But before I do, zooming back present day into what Chewy is doing at this exact moment in time, I think you're going to be able to see some really, really cool evidence that it's just a matter of time before we make it back up to $25 a share on Chewy. Sweet. Let's go now look at some intraday volume. And I'm going to pick one of my favorite stocks ever. I'm going to go look at Tesla. And what I'm going to do is I'm going to go to a random 3-minute chart. I don't know this chart by heart, but I'm going to go to December 7th, and we're just going to pick apart this random day on Tesla. And I'm going to stop and go back on a replay mode to just current day. There we go. And I want to walk through the volume that I see here and how it can help me or help you make really well-informed decisions. And I'm just going to pick apart this particular chart here. There is some amazing, amazing volume spikes here. And here's what I'm doing. I'm not even looking at the candles first. I'm looking at the volume spikes. Because you want selling volume to be high at a high price, and you want buying volume to be at a low price. When those two get flip-flopped, you have an outstanding, an extraordinary indicator into the future about what should happen based on closing prices. Let me explain that. So here on Tesla, we had a really nice little selling event. Meow, meow, meow. And you got a candle right here with really beautiful volume. In fact, let me back up just so we can look at this volume and study it in depth. This candle has a great volume and this candle has great volume. But what's cool is this candle right here, this hammer style candle, has really, really beautiful volume. In fact, it has more volume on the December 7th, Thursday, 8:42 a.m. Central candle than it had the previous 3-minute candle, which is a huge bear candle. What does that mean? Well, it means that Tesla's already dropped from 242 down into 237, which is already $5. And Tesla's average range is $9. So I have two choices here. If I take a trade bearish and elect to go short, expecting it to go lower, I should expect maximum $4 move because it's already moved $5. In fact, if you haven't watched my video about the average daily range, boop, go ahead and click on that now and check it out. But here on this bear hammer candle, if you're electing to go short, what that means for me is I would wait for, you're going to love this. This is going to revolutionize your trading, I promise. I would wait for a close below the hammer and then short a retest. Why would I do that? The retest doing this and this. That would be my expectation. And it's because of the volume. That's it. You already have 3 strong bear volume candle bars increasing. Tesla's already made a new low. And when you have a bunch of profitable bears, what do profitable bear traders do? They buy to cover. And I can look at the chart and visually see that you have profitable bears here who are already in profit land. So when they're in profit land, they're going to want to get out of profit land. And the way they do that is by buying to cover their position. Therefore, if that stock continues lower, I personally am going to wait for a close and then short the retest, which I know is going to happen because of all of the selling. Next candle, please. Now, what's fascinating about this particular candle is what you'll notice is it does not close below the hammer, which is fine. But now you have an inside candle and you have 4 bear volume bars in a row, which means, wait for it, Harry, there's a retest coming. I think I'm mixing up movies, but the point of the analogy is it's going to retest. Bears are going to take profit. Bull candles are going to come in. So if I'm looking to short here, I need to be very, very wary of just aggressively shorting because of all the bear volume. But last but not least, the most important part of all of my trading, what I do is I work all the time to try and analyze and determine who is trapped the most. When I find trapped traders, I go in the direction of the trappage. And that is how I capitalize on tons of market movement every single day. I can look at Tesla and say we have an inside candle, which is building pressure. We have 4 bear candles in a row. So eventually some bulls are going to come in. And then I use my favorite 2 letters in trading, I and F. When you put those 2 letters together in English, it spells the word if. And I say, if Tesla closes above this bear hammer and it traps all of these bears, the bears are going to cry. They're going to have to buy to cover and the stock's going to get squeezed and go higher. That's what's going to happen. Most likely. And I will play that over and over and over. So instead of waiting to go bearish, I'm actually going to go bullish. And you ready for the best part? I'm going to place my stop around the average daily range below where we could even go, so that if I am wrong and we do kind of get trapped in, I'm most likely going to be able to lower my increase my stop loss. So if I take my stop and put it down to here, that would take me to 235. We opened at 242. So we're now looking at a $7, $8-ish move. So the likelihood of Tesla going down here, it obviously can happen. Anything can happen in the markets. But now my stop is at a spot where I don't really anticipate it going, because if it does, it would be starting to hit its head against the average daily range anyway, especially in the first 30 minutes of the day. So here we go. Next candle that comes in, bull candle, beautiful upper shadow. Again, if I am more interested in a bull candle, I'm more interested in a bullish trade down here than a bearish trade, all because of volume. I see there are more bulls that are going to be trapped. Apologize. There's going to be more bears that are going to be trapped than bulls on this trade. So since there's going to be more bears that are trapped because of volume, I'm more interested in looking for a bullish trade than a bearish trade in the get-go. Now, granted, could this trade still break down and you still make a bunch of money? Absolutely. What's cool about it is now that the bull candle has come in, if I'm looking to take a bearish trade, I now will be much more comfortable to do that. And now I've created a really nice bracket order, bear versus bull. Do I want to make money as it goes down? Do I want to make money as it goes up? I'm prepared for both. And it's all entirely based on volume. And then when this candle comes in, the very next candle is bullish. When this candle not breaks above the high, but closes above the high, I know, price auction theory, that bears are now trapped. And this increases the odds relatively dramatically that the stock is going to go higher, because you have more bears that are trapped than bulls, and you got a good candle in here to indicate that we're going to go higher. Which means I'm looking to take this trade bullish. I'm going to increase my risk reward ratio back up to the prior high. So this is me simply buying low and selling high. I will be in the trade bullish at this point. And if not, I will absolutely get in if it kind of throws in a little bit of a lower shadow, something like that, and then bounces. I mean, I'm going to be in either way, but I'm definitely going to be in, and my stop is nice and comfortable, nice and large. I'm not going to tuck my stop right here because that's where everyone else is placing their stop loss, and I want to do things differently than everyone else. And let's continue on the next candle. Next candle comes in. Oh, nice lower shadow. Another beautiful hammer. Gorgeous. Next candle, also a bear candle. Next candle, also a bear candle. Ready for this? 3 bear candles in a row on Tesla. Max is 4, and then I'm going to get a bull candle. A bull candle is coming either the next candle or the one after. If I'm right, hit the subscribe button. Here we go. Oh, bull candle. Weird. Who would have imagined after 3 bear candles in a row that you're going to get a bull candle? Now, agreed, if you are shorting here, and I can respect anyone who's looking to short this position, I would still be waiting for a close below here. Why? When I'm looking at volume, I do not see a bunch of excited bulls that will be trapped. So if we close below here, all of these profitable bears will be profitable because we made a new low. Therefore, they'll be buying to cover. Therefore, I'll be waiting for a close below support purely based on volume. That's what I'm talking about, ladies and gentlemen. This is a volume game. These are real people. This isn't fully 100% the Matrix, although there is no spoon. There is no trapped bulls either. So I don't really want to go bearish. There's more trapped bears than there is trapped bulls. So I'm going to be looking for more bull trades. Next candle. Bull candle. Next candle. Scorcher. Oh, yes. 3 bull candles in a row. Most likely the next candle is going to be a resting candle. Small little resting candle. And at this stage, after the 4th bull candle in a row, now we're getting some volume, and I promise this is a really extremely important detail. After being in the trade for about 21 minutes, I'm going to move my stop loss from where it was, which was -1R, and I'm going to just inch it up a little bit to -0.7. Obviously, everyone and their mom, they're going to have their stop right there. Duh. I'm not like most people. You don't want to be like most people either. Most people are going to have their stops too quickly moved. The trader who is more patient wins. Warren Buffett said it perfectly. The stock market is a great dictator between who is patient and wealthy and impatient and broke. The more you wait, the more you make. You ready? Let's go. Next candle comes in. Another bull candle. Now we have a double bottom. 6 bull candles in a row. Literally based on volume. I can tell you that the bulls are winning this battle. They've had more consistent volume and a more consistent amount of candles. This is 6 bull candles in a row. The most bear candles we've had was 4. We now have 6 bulls in a row. Let's do some math. Is 6 more than 4? It is. Cool. The bulls are now in command. That's what's happening. So we're going to get a retracement. We're going to get a rest. This is going to be a very powerful double bottom, and we're going to go higher. Based on what? Volume. The more you practice this, and the more you study it, and the more you surround yourself with people who trade this way, the more revolutionary your trading will be, not only in 2024, but in every year after that. Oh, come on. Now we have 7 bulls in a row. Wow. 7 compared to 4. Here's our pullback. Here it is right here. Come on, Mr. Squiggles. 2. No way. We have 3. We have 3 bear candles above the 10. Oh my gosh. Wow. So here's what's amazing. Look at the volume now. Boop, tapered off. These 3 candles, every single candle is less than every single bull on the board. Price auction theory. There are more aggressive buying than there is selling at this stage. There are more people interested in buying. There's people interested in selling. This is going to go higher. And it's simply based on more bulls versus more bears. The bears have been trapped, and more bulls are beginning to show up than there was bears previously. This is the matrix. Once you know this stuff, I could add to this trade. I'm getting in more above this bear, and I know where to place my stop. Where? Below the most bullish volume, if I'm being very conservative, which is here. And if I just need to snug it up to right there, target, pop this into right here. I'm going to drag this target up just a little bit. And now I'm going to have one trade that's going to win for 1.4, hopefully, and another trade that's going to win for 1.1, hopefully. And then if this triggers, I'm going to move my stop loss up on both to lose small on both trades, all based on volume. Okay, another bear candle. We're just hanging out. We're hanging out. We're hanging out. I like the little bounce. I like the little upper shadow on that candle. Notice how this candle right here, the volume on this candle is more powerful than all those previous 4 bears. And again, 7 bulls in a row to 4 bears in a row. Okay. Next candle. And we're in. With a close. I love it. Again, a close, think about it like an auction. If you're at the dinner and the bid person's like, oh, can I hear 100? Can I hear 200? Right? All right, bang. And they close the auction. That person won the thing. That's what a close in the price action does. A close literally says this person is winning versus this person. This person is expecting the stock to drive higher. And look at the increase in volume here. 3 bulls in a row, all increasing volume. There are literally on this particular series of charts more bulls than bears in total. I'm now going to move my stop loss again. Wait for it. Wait for it. Guess where it's going to be? Right here. Right below this low, because now I want to build my holding muscle. What I say earlier about being patient, the longer you wait, the more you make. If you can build the muscle, at some point it will pay off. Right? That's the point. Not every single trade will you make a bunch of money holding your stops and being patient, but at some point you will. At some point you'll really nail the trend, you'll nail the direction. And if you can just continue to hold, looking at bull candles versus bear candles, bull volume versus bear volume, who's more trapped versus who's not. After this example, I'm going to zoom out to a bigger market chart and I'm going to tell you exactly what's going to happen in the broader markets, all based on volume and candles. Okay. All right, here we go. Next, we have small bear candle, pathetic volume. Poor guy has no shot. Boom, just smoked. Instantly smoked. Looking good. Oh, come on. Volume's increasing. Here it is. Bang, into target. Smoosh. What a trade. Beautiful. Beautiful, beautiful. And that would have been 2.5 on the day between 2 trades, all based on, candles and volume. I'm not really looking at anything else. You can use the moving averages if you want to. But now here's what's fantastic. I'm going to see if I can call the top on this particular trade before we zoom out and look at bigger, broader markets. The top is going to be where the most bull volume comes in. Oh, there it is right there. This is the second most bullish volume on the day. And where is it occurring? Is it occurring high or is it occurring low? This is helpful. Come on. You got to be pumped about this. This is awesome. This is it. This is Neo. Look, there is no spoon here. If we close below this candle, I don't know if we're going to. If we close below this candle, which I have no clue if it's going to happen, that means that you're likely going to have all of those bulls that are trapped, because this is high bull volume at the high of the day. We have right now gone from 237 to 243. So we're dealing with $6. Absolute max Tesla's going to move. It's another $3 based on the average daily range. And if at any point in time we close below this candle, we're going to get some selling. So I'm going to go forward. Oh, no way. We really do it 3 more candles later? That is such a surprise. And now, based on volume, we would be able to create a short order saying if we retest this level, and I'm going to place my stop above the average daily range of where it's going to go. I know it looks like it's high, but remember, we're already up 2.5 hours. And ultimately, I'm going to be looking to take my stop and move it down to here to lose very small. So before I go out to the big markets, let me just see how this trade would have worked. There's the retest right there. Come on. It's pretty cool, right? How did I know to short there? Volume. That was it. That was it. Because now I can take my stop loss, right? It's here. We've been in the trade an hour, so now it's here or it's here. Also, 10 EMA candle. Also, 10 EMA candle. First bull candle below the 10 EMA. And this is giving you the opportunity to now trail your stops into profits. And there's no way to lose on this trade. So you just made 2.5 risk units trading Tesla based on volume and candles to now make another 1R trading Tesla using just candles. Let's go look at the broader market, shall we? Here's the S&P 500 ETF, the SPY. Now what I'm gonna do is I'm gonna zoom out to a weekly chart just because I think the weekly chart's the most important chart for bigger time frames. And using exactly what we just learned about on Tesla and Chewy, I'm gonna point out to you based on volume. And once you see it, you're never gonna be able to unsee it. Check it out. SPY right here had huge buying volume. Stock had dropped, and that was the bouncing point until we closed below that volume bar. Once we closed below that huge volume bar, January 24th, 2022, on the SPY, that volume bar became old support, new resistance. You can see it here, 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 and here. And then the second biggest bullish volume that we have on the screen is right there, which marks the bottom, or at the time, the potential bottom. Because then at that spot, you know, SPY's low, it's out of support, it's had a good drop. And if we go below this candle, the world's going to end. But if this candle holds its strong buying volume at a low, I'm going to buy here. Okay. If you bought here, you did okay. Strong move up. We rotated back down. Old resistance, new support. And now bull candle after bull candle after bull candle after bull candle. We've had more bull candles in a row on the SPY on a weekly chart than we've had bear candles since over here. And this was 1, 2, 3, 4, 5, 6, 7. And what did we do? We went lower after a retest. Boom, yank, bang. I'm going to zoom out and I'm going to draw the exact same box. Check it out. Wait a minute. And we'll take this green line. Poof and poof. And I'm going to copy it, clone, move it over, drag. And this is where we're going on the SPY, 487. And when we get to 47, what are we going to do? We're going to retrace. How much? Oh, if only there was a way for me to know based on volume. Bang, bang. Clone. Because that was the biggest bear volume move that we've had on the SPY. And that would take us right back into 457, probably May, June. And then from there, what happens, Newsom? We go higher. Trend is bullish. And based on volume, I can tell you that. And what's also amazing is if we just come back to COVID and we look at COVID or any other awesome, amazing volume spikes, you're able to see so much. Once and when we got a trap, again, zoomed out, big picture, when we got a trap above all of that volume, specifically right here, perfect resistance, we broke above, old resistance became new support. And it was not only just price action that became support, it was volume. Not volume profile, just regular, basic, bottom of the screen. It's been there forever, and very few people have ever explained it to you so eloquently. Volume. When you start mastering this on the bottom of your screen, your trading will get better. You'll be able to make more money and do whatever you want to do with more money. More money oftentimes makes people happier and more useful and more confident and all the things. If you spend a lot of time, energy, and effort studying great trade setups, studying your bad trade setups, and reviewing the volume in those situations, and once you know what has happened, that's right, once you know what's happened, you're like, oh, okay, the trade did this, and then this occurred, and you're aware of it, and you can see it visually because it's occurred, replay it over and over and over. Bruce Lee said, I'm not afraid of the guy who knows 1,000 kicks. I'm afraid of the guy who knows one kick and has practiced it 1,000 times. If you had to guess, how many times do you think I have practiced taking trade setups based on volume? And not just done it with real money. I mean, Even after I've done the real money and I've either lost or I've won, I will go back and replay the exact same trade over and over and over so that my brain clearly sees this pattern. And if I ever see it again, I know when to implement the trade and I feel much more comfortable. I hope you found this video helpful. Thank you so much for being a part of the Real Life Trading Nation community. I'm honored, blessed to be at your service. Enjoy the incredible videos that my team, amazing company, and all my friends and family will continue to create for you for the rest of human history, because our mission in life is to enrich lives. And if you feel like we've done that in this entirely free video, feel free to click that subscribe button, click the bell, post a comment, and let us know how we can impact you more with videos. Give us ideas, give us suggestions. We are here to create massive value.